Netflix stock has been on a great comeback run ever since its huge April drop. But will it continue this momentum in 2023, or should we be worried of another downturn? Netflix was one of those easy to identify love childs of the pandemic. With everybody being in lockdown or working from home, we all had some more time to spare than we ever needed. So we turned our attention to entertainment. Digital entertainment, that is. Netflix saw an explosive user growth and never before seen numbers in terms of viewership. With huge growth and seemingly unlimited potential, the stock price went on a rampage, more than doubling in around a year and a half. It was not long before investors started thinking about what they had done. Could Netflix keep up this growth in the years to come? And would Netflix continue to be the dominant market leader in streaming, as it has always been? And could its current market cap hold true if this was not the case? With worries beginning to sprawl, you could see a sharp market correction beginning to materialize. And not soon after, the truth hit hard. With Netflix for the first time in more than a decade reporting a loss of subscribers, the company lost billions in market cap. Hundreds of employees were laid off, and the future of the one-time media darling was in question. But Netflix came back with a vengeance. Luckily, the management had a game plan. They needed to show investors that it could bring in more money as its subscriber growth was seemingly slowing. Offering a cheaper advertising plan was the best way to potentially do that. Netflix announced that more choice, especially for more price-conscious customers, will translate into meaningful incremental revenue and operation profit over time. The Netflix ad business will run on the Microsoft ad platform. Remember Microsoft, as we will talk about them further in this video. Netflix also added that it's planning to end password sharing starting 2023. Netflix already tested add-on payments for password sharing in some Latin American countries, charging around $3 extra. In these countries, the primary account owner must provide a verification code to anyone outside the household who wants to access the account, with Netflix repeatedly asking for the code until a monthly fee is paid to add non-household subscribers. A similar tactic could be used in the United States, pricing this add-on subscription just below the new $6.99 ad-supported plan. Trying to push people into price plans and having them on board will create a huge revenue and income stream they haven't tapped in yet for years to come. Netflix also announced a spending cap of around $17 billion per year for the foreseeable future. And with revenue again rising, with these new sources of revenue, we should see some profit figures we have never seen in this company before. Netflix is also spending its money into gaming, trying to get people into the Netflix ecosystem as much as possible. With game studios acquisitions like Night School Studios, Next Games, Boss Fight, Spry Fox, they now have 6 internal gaming studios in total. All this to get you as a consumer to spend as much time as possible with the Netflix brand. Netflix sees every single form of entertainment as their competitor and wants to get a hold of your time in any way they can. In the past, Netflix has made some notable acquisitions, like the Roald Dahl Story Company, making sure they are the only ones that can make new series, movies or games on Charlie and the Chocolate Factory, Matilda, The Big Friendly Giant and so forth. Having these known stories in their possession gives them a platform on which they can develop new hit franchises. And this for many years to come. I remember when we said you shouldn't forget about Microsoft. Well, there was this rumor at the end of last year that Microsoft was or is thinking of buying Netflix. This would make this the largest acquisition by far for Microsoft, greatly surpassing the $2.5 billion it paid for Minecraft, the $26 billion it paid for LinkedIn, or the $69 billion it recently paid for Activision Blizzard. What Microsoft would have to pay for Netflix would greatly surpass these acquisitions, even if you would combine them. Netflix and Microsoft are two companies that are already closely aligned. Netflix chose Microsoft as its advertising partner for their new advertising-supported subscription service. Microsoft President Brad Smith also sits on the Netflix board, and when you think about it, they are highly compatible companies. Microsoft is offering a video game streaming service, xCloud. Netflix is a video streaming service. By combining these two, they can not only cut costs, but leverage users in both segments, creating an incredible streaming service that offers both the Microsoft and the Netflix side, One platform where you'll spend all your time watching TV and playing games. With the big IPOs Microsoft brings with it, like Call of Duty and World of Warcraft, the power to turn these into movie franchises together with Netflix just seems like a match made in heaven. Having series that are part of the Halo universe now on Netflix instead of on Paramount Plus would also boost the platform to new highs. Another thing to consider is that if the Activision Blizzard deal Microsoft is trying to pursue gets the green light, Microsoft will have become so powerful in the gaming space that any new acquisition would be met with a lot of regulatory problems or would make any new big gaming acquisition impossible. So it would make sense that Microsoft, that sits on this huge cash pile with its huge profitable business, will look for another way to spend its money instead of it just piling up. Now that we've had a look at what Netflix did to create new interest for us, the investor, in its company and what might happen in the future, we'll have a look at the all-important numbers. Netflix's revenue has shown some nice growth numbers over the years, and while growth has been slowing down in the last quarters, with all the aforementioned new revenue streams in place, I believe Q4 and especially 2023 will see a new uptake in revenue growth for Netflix. Netflix's EBITDA has also been showing a nice growth trajectory, and if they can keep their cost spending at around 17 billion as they intend and get the revenue growing faster again as I expect, we should see this grow larger and faster than in previous years. Now, with a market cap of $137 billion, it's not a cheap company, but with a good balance sheet, with $6 billion in cash and a positive cash flow, growing that revenue and profit, I could see this stock only going up next year. And now if, and this is a big if Microsoft would purchase Netflix, it would probably be right to think it would pay a 30% premium on its market cap. That is a 30% profit you as a shareholder would get overnight. But of course, it is also very possible that this would never materialize. But even then, I think the stock and this company is set up for another bull run. If I was interested in Netflix, I would see myself investing in this company. However, if you want to invest in another FANG stock that even Warren Buffett likes, maybe you should check out this video.